Alrighty, folks, we are back in action here. Just gonna get the screen switched over, and we can get started. Apologies for the tardiness. SPDas, the trading floor is yours. Thank you.
Yeah, thank you, Igor, as always. And hello and welcome, everyone. Let's get started on the New York session now. It's about 6 minutes past 9:30 a.m. Eastern now, and let's get started. I think we've got FOMC overnight today, maybe in a couple of hours, or maybe 3.5 hours now. Uh, so just a note of some noise coming ahead. Otherwise, as far as the trading is concerned, we always place our trades based on the analysis that we have done, and we keep doing 3 sessions a day. So let's get started with the euro. Have cleaned up the chart for if you're joining in right now, you might want to just catch up with what has happened in the wave story. All right, that is just allow me to change the degree quickly to a minute. Okay, and what we are seeing on the right hand side is uh, pretty much lower degree 5 wave. I mean, I can just run you through a sub minute 5 degrees, 5 waves, sorry, not degrees, but it's sub minute. 1, 2, 3, 4, and 5, and it could be an A wave complete now. So that could be wave B up there, and then we can expect a C wave lower. Now that it's not a certainty that all the time it would. Now it's a 5 wave, so beg your pardon. One more low needs to be print if what we have done is correct, because 5 wave is an incomplete move. There needs to be one more low to complete the pattern. All right, so finally we are looking for a zigzag corrective decline 535, and possibly when it's a zigzag, the points where A and C are ideally equal. If you just want to count it, 530 and 382, that comes to 150 points. We deduct 150 from 460, it comes to around 310, just about where the Fibonacci 61.8% is lying. So ideally, if we hypothetically set up a channel, then price action should ideally follow this channel in the next few hours or so. And it should be interesting to see and watch how price action is shaping up. All right. As a trading point of view, positional trades are always on the long side. We are holding on the long side. But if you want to enter, I mean, this is not a bad price to enter. Okay, you can enter partially uh, just around the 1.04. Maybe you can enter the remaining longs around 1.03 handle, 1.03, 1.03, 1020, and the stop loss goes towards 1.0100 as always. Right, that is of this corrective decline would be a larger degree correction, right? And thereafter we will be in a very confident position to move the stop loss and bring it to a break even or even a bit higher. All right, so let's see how it's shaping up, and we are going to keep this as it is. We'll review when we come next in the Tokyo, Sydney. Let's get down to the dollar index now. I think even the three major instruments, dollar index and gold, mostly have fallen in line with the paths. Also, up to some extent, the coins. But we'll have to. It's going to be a very interesting. I really look forward for the noise, not because of the fundamental event, or we are waiting for the fundamental event to confirm and then open positions. Not because of that, but being a technical person, for us, a fundamental event like a GDP or an FOMC or any other, or maybe a job data on Friday, NFTs. It's going to be interesting on just Friday, NFTs. So we are going to meet just after that. But London, we'll be planning our trades way before that. Like we've been planning it already. Just a continuation of the story. So what I was saying was, when the fundamental event is coming up, it's a trigger for people like us. We are waiting for those triggers because price actually really kicks off towards the projected direction of the base or the Fibonacci ratios or anything of that mathematic technical actually. So always exciting to see that noise trigger price action and it starts moving in a bit quicker way. Most of the time, about 80-85% of the time towards the analysis, and sometimes, of course, we get stopped out. But that is around 10 to 15% of the time. All right, but by the time we were talking, we've done a potential wave path which could be followed. That is also looking like a neat little zigzag or 5, 3, and 5, which takes us to 109, 108.90. So trading point of view, if either you sell partial now and remaining around 108.90, it's up to you. But stop loss goes about 110.30, and yes, and the take profit is around 105. It's around 105. Yeah, 104.85. So that's okay. 105. All right. So let's put this as it is, or let's have it as it is, and let's see how the price action shapes up in the next few hours. We'll come back in the Tokyo session and over Tokyo Sydney overlap, and it will be interesting what the market has actually filled up, right? Okay, gold now. Gold is just a bit. You know what? If we go on the hourly chart, because we've already done the larger degree frame uh, analysis, maybe that could be the last wave rally. I mean, let's take an extension here because we are definitely holding shorts around. We can actually go and get out of the trade because it's around 55 and 65. It's a small 10 point M to M. But you know what? It's around the 75 that maybe price action goes or even higher to complete that five waves rally, this five wave rally, and also to print a new high above 2780 zone. What I would suggest is the actual short positions which we are holding for gold. I mean, that's We have already sold around 27 55 65 zone, correct? We look to add more around the 2800 zone. If only if the risk management permits, you should be doing this. Stop around 2820, just above that particular swing high that we are expecting, and target. We can then expect a corrective or a sharp reversal or decline. Now back towards 27 and 26 and 2500. All right, so that is the story which is now looking like for gold to kind to unfold. Okay, so we've got the first decline, and I mean you never know if it's a head and shoulder reversal happening. Then we are going to see prices decline or prices resume lower from here itself. That's a neat little corrective structure ABC that we are expecting price action to unfold. And only thing is that accounts are not really getting. It is not a five-wave drop at all. That's a corrective decline, and that because it's a corrective decline, there's always a chance of new swing high or a potential swing high just above that print, uh, and that's why we're kind of prepared to add some more around 2800 levels. All right, that's the story for gold. Let's keep this trade as it is, and let's move on to the Dow Jones. Okay, the story in the Dow Jones is quite similar to what we have. The price action is not done much. We are still contemplating whether it's going to be a new high or not. So I'll tell you what, if we've committed on the short side, but the stop loss has to be kept very tight, 45,500, nothing beyond that. If we get stopped out, we get stopped out. There's no need to worry at this point in time. The price action does what it does, and it's the best, and it's our boss, right? So we need not meddle right now. Out of fear or out of greed, we don't need to do anything. We just allow the price action to take shape where it wants to, and then if we get stopped out, we will relook at this entire pattern. I mean, I would not be surprised or I would not be hesitant to take this as an expanded flat wave 4 like that. All right. For now, it is okay. We've got wave 1, wave 2, 5 wave rally. That's a wave 1, 2, 3, 4, 5. That is wave 3 and 4, 5. All right. So at this point in time, okay, if you're not done anything, then kindly refrain from taking aggressive shots right now. All right, because we don't have a clear signal on the daily chart yet or on the shorter time frames because as price action really hovers around the top. I've seen wave 2 going very close to the beginning of wave 1 and then reversing sharply, but it's not always a certainty. All right, so let's be prepared for one more shallow high before it turns around. Okay, coins now. I think coins we have settled it last session. We have recalculated, and the trades are on here. Where we haven't moved anything or touched anything. We are expecting now. The earlier trade was off the desk. Be prepared for a 96 touch and get along on the 50% capacity, please, because we've got risk at 89,000, quite about 7,000 points, and targeting around 15115 and 123. So no change there. It's going to be interesting how the price action behaves during the noise. Ethereum, yes, of course, we are again 50% in. Same strategy, but that move is consolidating actually. I don't think it's preparing to decline further. It's already might have completed the five-wave decline, so it's already done a 535. Okay, so we are good to remain 50% long from 3100. Stop goes to 2900 and the target is 4300. No change there. And next is the Solana. Well, we are expecting this to happen, and it's good that we didn't come in on the long side earlier on. So allow prices to come back towards 220 and buy 50% capacity with a stop 117, target 315. No change there. So there is some kind of consolidation going on, and it is quite expected before the major fundamental like an FOMC is due. So no worries over there for the consolidation phase. But it's going to be very fast. So you have must, if you are interested in taking the position, then have your limits in place, also the stops in place. Don't leave that trade open, please. And Ripple also, we are wanting to commit 50% around 280.85, 2.885, and let's see where the price action is right now. It's beginning to cut loose. You see that arrow has some gap is beginning to fill. It's good to see what's going to happen after a few hours. All right. So those are the quick trade setups and updates for maybe just ahead of the FOMC trigger. It's only a trigger for us. All the fundamentals are always a trigger for us. We need not even look at what the numbers are going to come. But you need to have just a bit of conviction before we start doing that. All right. So let's bring this session to a pause now. It was a quick one, and once again, thank you for watching and thank you for your time. And I'll be handing over back to Ego. Thank you, Ego. Back to you, please.
Thank you very much, SPDas. Much appreciated.
Thank,
Always humbled by
thank
your
you,
experience and research.
thank you so much.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.